Good afternoon and happy Tuesday, everyone. Hope you had a nice Memorial Day holiday. It's Alissa, Coram, and Ed Carson here with a look at the stock market today. Ed, why don't you go ahead and give us a quick rundown of what we're going to be discussing today?
Well, we're going to take a look at Google, which cleared a buy point, and chip equipment maker KLA, which tried to, and Netflix, which was more chilled than chill today. But one thing that we saw in the market is we had a strong morning, and then we faded into the close, and there was definitely techs were lagging a little bit, while sort of the real world economy stocks did better.
Yeah, that's right. The NASDAQ only finished up 0.2%, but the S&P 500 up 1.2% for the day. The Dow leading up 2.2% for the day. But as you mentioned here, Ed, a little bit of resistance there for the S&P 500 at that 200-day line, which coincides with that 3,000 price level, even though we did see a 1+% gain.
Yeah, I mean, I'm not sure how much it's about the S&P 500, just other things going on. It was nice to try to retake that. That would be a nice mark because there's been divergence between the NASDAQ and the S&P and the Dow. I mean, it's been great to see these growth stocks doing well, but they did so much better than those other indexes, a little surprising. Coronavirus plays, and we'll talk about that a little bit more, had struggled today. Some of those companies that are either really doing well in that situation or at least surviving. And there was just a shift over to airlines, to banks, and some other situations. So that's not the worst thing in the world. If the economy comes back online, you're going to expect to see some of those coming back up.
Yeah, and get participation from those other groups in this historic rally that we've seen. But let's take a look at some individual names, starting off with, as you mentioned, Google. We're going to be looking at GOOGL, and Google gaining less than 1% today. It did fade a little bit along with the broad market, but hanging in a buy zone here with that cup with handle breakout.
Yeah, a lot of big techs actually reversed lower. Google obviously did not do great, but did hang on to a gain. It is above a cup with handle buy point here. It's been doing fairly well. I mean, people are using Google, and now if you feel like the economy is going to come back online, well, the advertising may strengthen some further. So, this isn't the best action in the world, though, in the context of how other techs did. It actually sort of outperformed, among sort of its peers.
Yeah, and for investors who have been buying some of the leading growth names that were the first to really break out in this rally, they're looking for some fresh ideas. So Google, among those that are now breaking out. So definitely good to add to that watch list. And we're also going to take a look at KLA, ticker KLAC. Didn't quite hang on to a breakout today. Looks like some resistance at the 180 level here, Ed.
Yeah, I mean, technically the buy point is, I guess, 177.27. Though, as you can see, all the way going back to February, there's resistance sort of at the 180 level, and it happened last week. So, I mean, that seems to be getting to be an area that we may want to go over. And people could also look at the 184.60 just above the left-hand side. I mean, bottom line, the chip equipment maker is doing fairly well. ASML broke out last week. This one almost did, but it faded a little bit. So, the chip sector has done reasonably well. It may not be the best time for it. If we're rotating a little bit out of techs, it may have a little bit more trouble. It's a lot easier to swim with the tide than fight against it. So we'll just have to see how chips do, going forward. But it's been a really strong stock.
Yeah, that it has. And moving on, last but not least, let's take a look at Netflix getting chilled here, declining over 3% today. And now, before its quarterly earnings report in April, it was looking really strong. And this is one of the notable coronavirus adjacent plays, but getting hit with a pretty sizable loss today.
Yeah, it dipped below the 21-day moving average. That's the green line that's there on Friday. Now today, it really lost sight of that. It's down 6 straight days. I mean, look, this was a big benefit of stay at home, but as the Memorial Day weekend showed, a lot of people did not stay at home. And some more people are going back to work. And if you see that trend continuing, look, people are still watching Netflix, don't get me wrong, but some of that massive trend that maybe some of the benefits on subscribers and other things won't be so strong. And just investors may shift their money. Maybe they're going to buy United Airlines. Maybe they'll buy JP Morgan instead of some of these coronavirus plays. RS line also coming down. If you bought it on this short consolidation, as it came out of like around 450, you probably need to sell because it's gone down probably 7 to 8% from that
Right.
area. So you probably need to get out. If you bought from the prior buy points, like around that handle or the top of the prior base there, maybe what you want to do is look at the 10-week moving average. That's the weekly equivalent of this. That's actually at 408 or so. So it's getting close to that and like a decisive break of that. Making sure you don't take a loss. Like if you bought at 405, 406, you really don't want to be taking a loss on this stock.
Yeah, exactly. And as you just pointed out, multiple entries here, but it's always good to keep in mind proper buy rules. And one of those is selling into strength and locking in some profits. So, investors who did get in at this earlier entry maybe could have, at least on Friday, opted to take a little bit off the table. But at the very least, maybe for some of those newer shares, definitely hitting that 7 to 8% sell territory. So this is one we're going to keep watching, as like you mentioned, that 10-week moving average is definitely a key area to watch. So we'll be keeping close tabs on this one. And that is it for today, everyone. Thanks so much for joining us. And you can be sure that the conversation will continue tomorrow morning on IBD Live. And that is our daily morning live stream where we're sharing our charts and new trade ideas all the time and following up on prior trade ideas as well. Execution from the start of the trade and following up on additional entries and how to handle it all the way through it.
Yeah, and we looked at Netflix today, this morning, and I'm sure there'll be a discussion about some of the stocks, the growth stocks that were pulling back, not just in that morning, but as it continued through the day. So we're always analyzing these markets and looking back on what we've done before to see how those went.
Yes. All right, everyone. And if you haven't yet joined us on IBD Live, we hope you do so. You can check it out at investors.com/IBD Live. We look forward to seeing you there. And as a reminder, these conversations are for informational and educational purposes only. So make sure to do your own research. All right. Until tomorrow, this is Alissa Coram and Ed Carson.